Analyzing the market trend is the first thing anybody should do when they get up in the morning to see what to do with their portfolio. Candlestick analysis makes for very easy trend analysis in the sense that it identifies exactly what investor sentiment does time after time. For example, on Wednesday of last week, we saw a big, huge day in the Dow. They gapped it up through the 50, but the warning signal was they gapped it up when stochastics were in the overbought condition. The Japanese rice traders tell us that most people invest exuberantly at the top. That's when you start looking for sell signals. You can see the next day they did a doji. Doji tells you there's indecision between the bulls and the bears. What's a very simple price movement? It's usually if they come up through a resistance level, they'll come back and test it to see if it's going to act as support. So the fact that we saw a doji told us we probably should start watching for profit taking. The fact that they opened it lower the next day told us they were probably selling it off, at least back to the 50-day moving average. When they bounced up, there was still the possibility that the bulls were in control had they opened positive and started trading positive. The fact that when we woke up this morning and saw the pre-market futures were starting to head things down told us we'd still, if we'd gone short or closed out positions, we should still stay out of long positions and or go short on charts that were showing very strong sell signals. The NASDAQ provided the same type of analysis. They gapped it up. The next day they did a doji harami. Remember, a harami tells you the buying has stopped. Then they gapped it down. Remember, if you see a doji followed by a gap down, that's what we call our best friend. In this case, a bearish best friend. In simple terminology, if you see a day of indecision and they gap it down from that day of indecision, you can pretty well assume that they've made their decision, and it's a bearish one. Today, after closing right on the T-line area on Friday, for this uptrend to continue, we needed to see it open positive and trade positive. The fact that they were taking it lower told us the bears were still in control. We're still in a downtrend. Now, was there any way to project that there was going to be as big a downtrend as this in today's trading? Definitely not. But the nice thing about candlestick analysis is it puts you in the right direction to be participating in those type of price moves. Utilizing that same type of information, we could see what was happening in STX after a bullish harami gap up, giving us a strong up move until we hit a major resistance level, the 50-day moving average. Many people ask, well, if you're buying here, what's your next target? Always say watch to see what they do at the next major resistance level. As we can see, there was a hanging man signal, and then kind of a bearish spinning top. And the gap down the next day pretty much indicated they weren't going through the 50. It was time to close out that position and or start going short. Electronic arts gives you a very clear understanding of what's happening in the trend. The downtrend started with your bearish engulfing signal closed below the T-line. Your bearish J-hook pattern. Wave 1, wave 2, wave 3 about the same as wave 1. Now you have wave 1, wave 2, starting into wave 3 with the expectation that wave 3 could be the same magnitude as this wave 1. This allows investors to be long or short with a high degree of probability, again, based upon a very simple factor, that human nature works the same way time after time. That'll be it. We'll see you in the chat rooms.